Welcome back to the Eric Krown Crypto channel, wishing you a happy, healthy start to this nice Saturday morning up here from, yet again, another sunny day in Dubai. It's always sunny here. It's actually quite nice. Anyways, I wanted to follow up on the next sort of meme which I'm seeing within this market, which is the decoupling. That's right, the decoupling. Bitcoin has decoupled from stocks. Stocks go up, Bitcoin goes down, and you know that we're heading back down to the hells below. And of course, we should just forget about when this happened like a month or two ago when Bitcoin was going up, but stocks were going down, where Bitcoin was going back to the heavens. It's like we haven't seen any legitimate or any tangible long-term information that markets have decoupled from each other, and that's what I really want this focus of this video to be about, as we'll go through the data soon enough. Anyways, with maths, of course, and we'll also even follow up on some of the shorter term time frame analysis that we're looking at from yesterday, although that's, you know, a little bit less exciting for right now. Anyways, on Friday for traditional markets, all of the major bourses, which we'll start off with SPY over here, or SPY futures, I should say, ES1, did enjoy a nice reversal off of, you know, what does appear to be a higher low. Actually, this rally really started on Thursday, obviously, but, you know, you can see the follow through on Friday with a strong weekly closure, more importantly, again, in an overall higher low fashion, getting its 1, 2, 3 higher low within this series here. Now this is SPY futures. Of course, we go to NASDAQ futures. We can see the same thing basically. In this case, it actually only has 2 higher lows because this one actually retested this prior low, but you know, you get the idea. Anyways, same thing, bouncing off that white moving average, which is the 200 simple and the green 55, and actually now closing above all major moving averages. Same thing with SPY over here as well. And if we go over here to triple Qs, which actually has a little bit of a better relationship to Bitcoin and by extension all cryptocurrencies, we see the same thing as well, right? Yeah, it did close a little bit, or sorry, it did trade a little bit below there on Thursday. That's fine. Didn't close below, closed above, and again, same sort of bounce does occur. So you can see all these markets moving in lockstep, or as we like to say, moving in concert. And I think that this is best seen on the higher term timeframes on a weekly. So Bitcoin went down on Friday, so that means that the decoupling has happened, right? Well, I would argue that's a really unclear way of looking at things. When we're talking about correlations, especially when we're talking about long-term trend correlations, for fuck's sake, looking at anything on a day-to-day basis is just not that helpful. Looking at anything on a a less than day-by-day basis is even less than helpful. Now, unless if you're like a super sophisticated quant firm that is trading in such small increments and taking advantage of such small pieces of edge, maybe you can make you could probably make that work if you're quite clever about it. But in terms of observing correlations over the long term, again with trend in mind, this is just in my experience not helpful nor accurate. So I would say that it is that it is just not at least historically relevant to be looking at anything less than a weekly when talking about correlations. In this case, we can actually bring up an indicator that mathematically will show this to us, the correlation coefficient, which measures the correlation between, in this case, triple Qs and Bitcoin, represented by this right here, showing a pretty strong correlation, 0.57, which is, pretty damn good. As you can see, over the long period of time, things have been more correlated than not. And yes, this is very consistent amongst not just triple Qs, but also SPY, and also NASDAQ over here, but triple Qs has the strongest relationship to Bitcoin, so to speak, and it's doing about the same thing as we do see on the higher term time frame scale. You do see a few times in history, over the last 4 to 5 years where they have been negative correlations, but they were very short-lived. What does that mean? That means that one of these assets is likely lagging behind the next. In this case, it's Bitcoin lagging behind traditional markets. Why is that? Because cryptocurrency is weak compared to traditional markets. Why is that? Because I can only guess here, but I think it's because stocks have real value and earnings, and Bitcoin is magic internet money. I don't know though, but that statement is going to piss a lot of people off. Anyways. You get the idea. The picture that I'm painting right now, or what I want to be looking at right here, is that yes, these markets still are correlated over the long period of time, as we would expect, because this is really a game of liquidity, and Bitcoin probably does follow through. If we're looking at a weekly right here, you can see that triple Qs, if you were to just get rid of the name on the top left hand side, will look very, very similar to Bitcoin. Again, getting rejected by the green 55 exponential moving average right here, and then coming down and finding its footing along the 21 and 9, which we can show on Bitcoin right here. Oh, very, very similar. In fact, Bitcoin hasn't come down as far as triple Qs just yet. You know, it did come all the way down to the 21. Fair enough. They don't need to be mirror images of each other. That's not what fucking correlation is, for the love of God. But they need to be like brothers, essentially. They need to look like brothers. And in this case, yeah, we do see, I would say, just about that. So what would that suggest? That would suggest that, yeah, no, while Bitcoin could have some short-term, medium-term downside moves, we'd still probably be looking for it to get picked up somewhere around here if it does have another leg down. Again, based off of the long-term macro videos that I've been putting out on this channel every Sunday, and the most recent one on Wednesday actually, for the new monthly, I'm getting more signals that the macro low for Bitcoin is more than likely in rather than not. So if Bitcoin does come down more, probably going to base out, or anything basically back above like 19,500 is another higher low for Bitcoin. So again, I don't really have a reason to be like full on macro bearish, even though things can come down further from here, obviously. But again, as long as Bitcoin holds that pivot, that's essentially going to be the tune that you're going to hear me singing on this particular channel. Anyways, yes, so we've got that. Holy shit, Bitcoin has a 100% correlation to Bitcoin. That's crazy, man. That's wild. Indicator working as expected. Anyways, let's now pop in over here and go back to the daily HPDR indicator. We are looking at the bottom side of the 50% of historical returns range lows, which is this area right here, or I don't even have it marked off, but this area right here on the daily as a potential basing area. So that does kind of play hand in hand with the chart that we just saw, in the sense that Bitcoin just played at that pullback. We see the rest of the markets kind of having a nice bounce from that region. I guess you could theoretically be looking at a potential higher low from this region right here. What would invalidate that, thus validating lower price action, perhaps all the way down to the mid to low $20,000 territory, with very likely a stop along the way at 21, like low 21s, would be a daily closure below the range lows right here, which is 22, same thing as yesterday, like 22,200. Something like that would do it. 4-hour time frame, I think, is the same thing as well that we were looking at yesterday, and the hourly setup did not fire off. Just to get that out of the way, there was no, there was a potential for setup, never actually fired off. So no point in talking about that today. 4-hour time frame would suggest continuation with a closure below this region right here on the 50% of historic returns range lows, which is 21,800. So either a 4-hour closure below there, or a daily closure below, like, what was it, like low 22? It was like 22.2, or let's just say 22. It's just easier to say. At that point, yeah, very likely going to retest somewhere around the February lows, which was 21.3, 21.5 region. Probably aligns for another short-term bounce there, and then very likely down to the 20,000 to 20,500-ish region. But again, that's well and far away right now. Until then, until we actually see a closure below these regions, I don't really have a reason to be necessarily looking at or calling like a full-on break, even though things do look, pretty nasty here, to be fair. If I was just looking at the chart, I'd say, it looks like it probably wants to go to the downside. But based off of those correlations and based off of those prior charts, I'm inclined to say that, BULAs do have a bit of a chance here. What would confirm that chance, however, in confirming a bit of a bear trap? Same thing as yesterday. Need to see Bitcoin, actually, no, it's a bit different than yesterday. Now I need to see Bitcoin on a 4-hour time frame close back above $23,000. These ranges are moving, moved a little bit up right there. So ultimately, I need to see something like that. Let's now move into Stocast Momentum, see where those pivots are for the weekend. Hourly time frame will be showing upside momentum above 22,350, where Bitcoin's literally been trading like a fucking pinstrike for, it seems like a day. So probably doesn't mean all that much, especially being that it is a weekend. 4-hour time frame is going to be showing upside momentum as long as Bitcoin's above 22,250. Okay, fair enough. Currently about $100 above that pivot. 6-hour time frame is still pretty hard down, but getting into the critical zone. Will be showing down some momentum as long as Bitcoin's below 22,500 or so. 12-hour time frame is going to be also freshly down, looking pretty weak here below 23. Oh, that's weird. That 23 number matches up exactly with this 23 number right here. And then the daily is also continuing to nosedive below 23,750. But again, getting very, very close to that critical zone here. So what essentially does that mean? It does mean that if we're going to see continuation of new lows, it very likely happens actually over the weekend. So if you are, if you are bearish here, you're looking for this to happen, I'd say latest by Monday. And probably more appropriately today, Saturday, or Sunday. And again, those validation conditions we just spoke about on this indicator right here. If we fail to see those validation conditions for continuation not met, then naturally momentum on these shorter and medium term time frames is going to start to, turn back up. And the 4 hours kind of already there, the 6 hours basically there, and 12-hour, maybe a few more closures, and it'll be and it'll be within the critical zone there. So it is a bit of a ticking time bomb in the sense that bears need to push for continuation like now rather than later. And once U.S. markets open back up for the real trading week, that's when you would expect those correlations to potentially come back into play. Maybe not Monday, like Tuesday, Wednesday-ish, let's say. But ultimately, the point that I'm trying to make is that, if I want to be bearish, which, there's actually, still good reasons to be looking for pressure to the downside here, the next, 72 hours at most, more reasonably probably the next 48 hours, so where we'd be looking for continuation down to the next level, like 21.3, and then below there, like mid to low 20s. And if that doesn't happen by that time frame, very likely we're going to see a move to the upside. In fact, on that note, and what I'll end with over here, should I talk about this right now? There's potential for a 4-hour Joule signal or Joule setup. It is showing white right now, but it needs to close in this fashion and then really have a close of a closure, which has another 3 hours and 30 minutes left to go. But if we do see that alongside a daily uptrend, these stats have been relevant for this particular setup. And I'm only looking at setups that happen over the weekend here. So there's only been 32 in the past 3 years, just so you know. Only 30, so 50, so there's 3 years only on the weekends. It's not going to be all that much alongside daily uptrend as well. So there's a filter condition within there. In that case, the results have been pretty damn good. Obviously, 32 is not like a whole hell of a lot over 3 years, but it's pretty damn good. Still, percent profitable, 81 and a quarter strike rate, profit factor of almost 4. We'd probably be looking at like a 3 to 5% move to the upside from here, which is of interest if that does fire off, because 3 to 5% puts you back above 23, which would be sort of my area for confirming a bear trap and price action back up, ultimately north of 24, in the following week or two. So, again, it's pretty far away from being confirmed right now as far as timing goes, but, within the cards, and fair enough. Again, we're not talking about certainties here. We're talking about statistics. And honestly, I wouldn't feel that confident about that one. I would not be trading it myself. Anyways, that's a good place for me to be leaving off. As always, want to show Bybit. They got 0% on maker fees for derivative contract orders. I still think that's a pretty fucking good promotion, all things considered, because, 0% fees, obviously very, very good if you're going to be a more active trader. But at the end of the day, make sure that you read the fine print so that you can understand if it's a promotion for you or not, or maybe not relevant to you at all. I think that's enough shilling for one day. With that said, take care, much love, and see you hopefully soon.